Hello, my name is Vince Zimmerman, and today I have the first person I call when I have a real estate deal that I want to do. This is Kris Fleming. She's the founder of mortgage brokerage KFP Investors LLC. She's also the owner of Aunt Sally LLC, which is a company that manages private equity in real estate. Welcome, Kris. Thanks for coming on.
Thank you so much for inviting me. I'm pleased to be here.
Yeah, like I said, you're the first person I call when I have a real estate deal that I want to do. You help me figure out how I'm going to pay for it.
Well, I really appreciate that.
So we
That is my favorite part of real estate. Investment real estate is the money part. I don't figure out which faucets to put in or which sinks or which countertops, but I really enjoy figuring out how we're all going to pay for it and we're all going to make money.
That's the name of the game right there, right? So, between KFP Investors and Aunt Sally, I think I've been involved in 3 or 4 of your deals. I'm trying to remember how we met. I know the first deal you helped me with was with KPF Investors, and I had a out of state single family investment property that I bought in Kentucky in 2022. And you helped me finance that with a DSCR loan. But I can't remember how we actually got in contact. I'm not sure how I got your information. Um,
No, it's a mystery. Looks like that was before we even, it was a while ago. It was before we even started tracking how we met.
okay. Well, we met, and I'm glad we did. Um, but I don't know anything about your history, so I was wondering if you could just tell us about your history of what you did before you started the Investor LLC and how that came about.
Yeah, absolutely. So before KFP Investors, I was actually working in banking. I did not set out to have a career in banking. I set out to have paid vacation time and health insurance. And as I started as a part time teller in a bank in my small town where I lived at that time, I quickly discovered that helping people with their money just lights me up. I really, really enjoy bringing the value and the reassurance. Money is a very emotional topic for a lot of people.
Sure.
So being able to improve lives in that way, like I said, it just lights me up. So over the course of 12 years and through three different banks, I worked from part-time teller, full-time teller, operations, banker, assistant branch manager, commercial lender, and underwriter. Over the course of time, I just developed a niche for investment real estate. I'm guessing because I enjoy it so much. So by the time I left banking, I was really doing exclusively investment real estate lending. What I was finding as an underwriter is that banks typically have a pretty narrow set of qualifications and guidelines that they will approve for investment real estate. I was finding that I was having to turn down files that I really sincerely believed were good files, but they didn't fit in the bank's box. So I heard about mortgage brokering and I did a little research. I don't think it was even 2 weeks after hearing about mortgage brokering. I don't think it was even 2 weeks till I turned in my notice and launched KFP Investors.
Wow.
So, what I love about what I do now is that I went from underwriting and making loans in one set of guidelines to now we can broker to over 300 different lenders. So, if we, what was it somebody said to me yesterday evening? They said, instead of asking me what products we can offer, we like to ask, what do you actually need? Not what is our buy box, what box do you need? And sometimes it's a trapezoid. So we go find it.
So yeah, each lender that you work with has a different set of requirements. So depending on what the investor needs, you can reach out to different lenders and figure out what it's going to take to help them get that deal done.
Absolutely. So it's a lot of fun for me too to get to find the right lender. I really enjoy figuring out the puzzle pieces, gathering all the pieces of the puzzle and figuring out what's going to work best for the client. But to that end, that's actually how Aunt Sally came to be. I do a lot of speaking and presenting and educating to real estate investors. And so I sometimes would talk about if your Aunt Sally or your Uncle Edgar wants to partner with you to invest in real estate, this is how you would structure that. So when I found opportunities, even through the mortgage brokerage, that didn't quite fit into the buy box of any of these over 300 different lenders, and I started using some of my own money, that I just called it Aunt Sally because that's who I had been talking about in my speaking and my educating. So I became Aunt Sally. And then Aunt Sally just sort of took a personality and life of her own. So I started out by using my own money on these investment deals and partnering with real estate investors. And then before I knew it, I had people calling me saying, "Hey, will you take my money too?" And I said, "Oh, the Securities and Exchange Commission has some rules and regulations about this." So we got that squared away, and the Annually Fund One LLC was born.
Yeah. Um, so you start out in as a bank, working in a bank, and you're underwriting traditional bank loans, and you're finding that a lot of investment loans don't fit into the bank's box, and you're unable to fund them. So you start KPF Investors LLC, and you're working with different types of lenders. What type of lenders are you working would fund a deal for KPF Investors? Not traditional banks, right? These are
Right,
not.
right. We do broker to a few traditional banks, and that's primarily for truly commercial type of deals.
Mm,
So, as an example, through our channel, Wild Fig Financial, we specialize in agency debt for larger multifamily and SBA lending with a real estate component. So, those loans often do go to conventional banks.
okay.
However, with KFP investors, what we're finding is that we typically are brokering either to direct lenders or to wholesale lenders. So if you can imagine, for example, when you go to the grocery store, you you buy your groceries, but the grocery store manufacturer the groceries, didn't put them in cans, didn't put them in freezer packages, didn't grow the food,
Right.
right? They got the groceries from the wholesale grocery provider. And the wholesale grocery provider, wholesale grocer, they got the groceries from, probably some larger distributor, but for the sake of this illustration, we'll say from the farmers and from the manufacturers and, from the cereal makers, that sort of stuff, right?
Mm-hmm.
So basically, we are the grocery store. And we go and we find different wholesale grocers that have the best deal or the products that our clients really like, and the terms that our clients really like. And we get the money and the loans from them.
Okay.
They typically, so let's say maybe we make 10, 20 loans in a month, and the wholesale lender makes 1,000, 2,000 loans in a month. So they have different investors to whom they sell those loans. So, as an example, perhaps investor A likes this buy box, but not rural properties. Or perhaps investor B has these really great terms, but only on loan amounts that are $250,000 or more. So what happens is the wholesale lenders, they take all of the loans that fit for this investor's buy box, and they take all of the loans that fit for this investor's buy box, and they sell those loans to those investors.
Okay.
So
That makes sense.
essentially, it is Wall Street money, securities investors, where the ultimate funding originates.
That makes sense.
Yeah, so we just break it down into smaller and smaller and smaller pieces until it gets to your property.
Okay, so that's KPF investors, and then if so, you're doing this, and then you're still finding that there's some deals that you can't find a lender for. There's some deals that you're unable to fund, so you decide to start funding some deals yourself with with Aunt Sally. Is that kind of how that worked?
Sort of. It's not necessarily, most of the time, it's not necessarily that we can't find a lender. It's more that we can't find a lender in the deal's current state.
Okay,
So, what we do is we bring some private equity to the deal to alter its state so that it qualifies better
right.
for for wholesale lending. So here's an example. The very first deal that I did as Aunt Sally was I had a client, a repeat client, he's a fix and flipper. That's his primary. I think he has a few rentals now, but his bread and butter is fix and flip. So he had a deal that he wanted to purchase, but he lacked the liquidity. He had some liquidity, but he didn't have enough liquidity. This is someone I knew. This is someone I had a relationship with. And the issue was not poor money management. The issue was he had three properties that were under contract for sale, but they just weren't going to close in time for this new deal. And it was a screaming deal. So everything was there except that he needed a capital partner, or he needed, or as most people come to me, they want a seller carryback, they want a seller second, they want a second mortgage. Well, most lenders are going to completely exclude seller carrybacks, second mortgages, anything like that. So what we did was we created an LLC that was specific to that property. And I invested the capital that was needed for the liquidity as a minor partner, minor member of that LLC. And then he was the major member, major partner of the LLC. And so he used the LLC's liquidity to get the fix and flip loan.
Mm.
So thereby he qualified for the loan. And I'm a really good silent partner for the most part, unless somebody needs me or has questions, or unless the deal goes sideways, then I jump in and do everything I can to rescue it. But yeah, so one of the benefits too of having a partner, an equity partner, as opposed to a loan, is he didn't have to make payments to me on the fix and flip property, on my funds, while he didn't have income on the property, right? So when you get a fix and flip loan, you still have interest payments due every month.
Right.
Generally not amortizing, but you still have interest only. Well, in this situation, he was able to take care of the interest only payments, but didn't have to pay me anything while he had my money because it wasn't a loan, it was an equity portion. So when he sold the property, then he got repaid, I got repaid, the lender got repaid, we all made money, and then we did it several more times.
Everybody wins.
Yeah, yeah. That's the goal, is that it's a win-win-win situation.
Yeah, I've been involved with the Aunt Sally funds as an investor. I've been able to invest some of my business funds and some of my solo 401k funds into some of your Aunt Sally deals, and I've been super happy with how that's worked out for me so far.
Well, thank you. Thank you. I think we've got another one that should be coming to maturity in the next 60 days. So
Excellent.
hopefully I'll get to write you a check very soon.
I'll look forward to it.
Me too. That's my favorite part, is writing the checks and getting people paid. It's a lot of fun.
Yeah, it's a good feeling to know that your investment it worked out the way that you had planned, because there's always a chance that things could go sideways and it could be a bad deal, and you never know what'll happen. But
Yes.
so far,
Yes.
everything's worked out really well.
Good.
So with KPF investors, let's see, we've covered a lot of the questions that I had, but I did want to touch on just what type of loans you normally specialize in. If is there a typical loan that usually works out for for more investors?
There is. So the majority of our lending is cash out refi after renovation or cash out refi after equity has been building for some time. So the reason for that is we certainly have fix and flip loans, as I just illustrated in the story that I told about how the Aunt Sally Fund was formed. So we definitely have those. However, where we really shine and excel is, here's an example of one that we did not too long ago. We had a gentleman, again, a repeat client. We know him fairly well, really enjoy working with him. He had a property, a triplex that he wanted to purchase. Again, lacking liquidity. We investors typically like to have our cash out. And so sometimes we're patting our pockets going, yes, I want to do that deal, but I'm about $80,000 light. But we also tend to have friends who can help us find that money. So that's always a good thing. So what we came to recognize was this gentleman had another triplex that had some significant equity. He had a single family home that had some significant equity. So we did a simultaneous loan and closing across all three properties. We cash out refied, we rate and term refinanced the single family home. The reason for that is a single family residence has a higher LTV than a 2 to 4 unit property, has a higher allowable LTV. And because we could do rate and term on that one, we could actually go all the way up to 80% LTV on the single family residence. Then on the existing triplex, we were able to go up to 70% LTV on a cash out refi on it. So we had all these pieces and we just kind of moved them around on the table to get the pattern that we wanted. So we moved all the debt to the single family residence for a rate and term refinance. Then we cash out refinanced the existing triplex, and we used those funds to purchase the new triplex, and the client actually walked away from the purchase with a check. So he actually got the money when he closed those three simultaneous transactions. No doubt he was at the closing table for a little while signing all that and probably got writer's cramp from all the signatures. But it's not every day that you get to go to a purchase and walk away with money. So that was pretty
Yeah,
good.
closed 3 transactions in one closing.
Uh-huh. Uh-huh.
It's a good day.
Yeah. Yeah. So I think we're working on some more deals for him right now, actually. So we love making people happy.
Cool. How do you build relationships with your lenders that you work with at KPF Investors? Like, how do you get you said that they're wholesalers, so how do you build relationships with these wholesale lenders?
I love that question. So, when it comes to mortgage brokering, there are two ways that a licensed mortgage broker can get paid. Um, Unlicensed mortgage brokers is a completely different topic. Let me just say, though, that when KFP Investors was launched, I made the decision for us to be licensed and maintain licensing because business purpose lending can be a little bit like the wild, wild west. And I wanted that added verification and peace of mind for our clients to know that we regularly go through that vetting process. We maintain our education. Our clients are working with a legitimate organization.
I didn't know there was
So,
such thing as unlicensed mortgage brokers.
yes, yes, most states do not require business purpose mortgage brokers to be licensed.
Okay,
Yeah.
interesting.
So back to how licensed mortgage brokers can get paid. They can get paid by the lenders so that their origination fee goes into the client's interest rate. So rather than, let's say, a 7% interest rate, maybe the client gets a 7.625 interest rate for the life of the loan, 30 years fully amortizing, or 30 years with 10 years interest only and 20 years fully amortizing. But the whole period of the loan, the client has that higher interest rate. Or now the client would have the option to pay discount points to then buy down the interest rate, but the math gets a little less direct in that way. So it's not necessarily an apples to apples relationship.
Yeah.
Alternatively, we can do borrower paid compensation. So the first example was lender paid compensation, where it goes into the interest rate. We can do borrower paid compensation. So what that means is we, as the originators, we get paid at closing, and it is a line item on the settlement statement. There are no secrets about how much money we're making or who or how. So it's right there out in the open. I really like the transparency about that. But additionally, when we use borrower paid compensation, that means that you, the client, are getting the very best possible interest rate that we were able to find for you. So you're not paying us over the length of the loan, you're paying us at the closing table, and now your property cash flows that much better from here on out. Well, with that particular structure, part of the reason that we chose that was not just the transparency, but also just the ethics behind. There's sort of a fundamental principle that whoever is paying you is who you're working for. That's how most humans, tend to see that psychology. So if the lenders are paying us, that makes us working for the lenders. Whereas if the borrowers are paying us, I believe we're working directly for the borrowers, which means the lenders are marketing to us for our business, for our files. So it is not difficult at all to build relationships with lenders. I literally get dozens of marketing materials and phone calls daily from lenders wanting our business back, or wanting us to give them a try, or wanting to give us a quote. With KFP Investors, one of the things that we've recently started to do with all of our originators, all of our loan origination assistants, and all of our processors, is every Tuesday and Thursday during our daily meet-in call. We have a call from 2 p.m. to 3 p.m. Central. Every Tuesday and Thursday, we try to give the first 10 to 15 minutes of that meeting to a lender so they can tell all of us more about what they can offer and educate us, so that to help us find the best deals for our clients. So that's sort of our process. We also have a database of lenders with whom we have worked or perhaps want to work, and that database is searchable. So if I need a property in Georgia that is a duplex and might be rural, then I can search our database and find a lender who can find all the lenders who can help us do that loan. In that database, we also have lenders that have a flag that say do not work. So the ones that we feel do not take good care of our clients, they get a no bueno, we're not talking to you anymore flag.
What's an example of a lender that something they would do that would cause them to get a flag?
Yeah. So the most recent one was we had a client, a 5-year prepayment penalty on a DSCR loan is standard. There are some states where a 5-year prepayment penalty is not permitted. So I think Kentucky is one where only a 3-year prepayment penalty is permitted by state regulation. Therefore, the prepayment penalty has to be brought down to 3 years. We had a client who very specifically, from the moment of application, let us know that they wanted to buy down the prepayment penalty to a 12-month prepay.
Mm-hmm.
And all through the application process and the underwriting process with the lender, we reminded them multiple times that this was supposed to be a 12-month prepayment penalty. And we would log into their portal and we would work the application and would see that it said 24-month. And we'd let them know again, this is a 12-month prepayment penalty. They kept telling us that they had it corrected. It was all set. It was all squared away. The client got to the closing table and the document said 24-month prepayment penalty.
Yeah.
So immediately, of course, I reached out to the lending company and said, hey, this is not right. And they said, well, we can fix it, but we have to charge the client more. There is no way I am going to let a lender charge my client more for a mistake that the lender made.
Right.
There's no way it's going down like that. So ultimately, we did get back to the 12-month prepayment penalty and everything was squared away. But you better believe I won't be taking any more files to a lender who, my responsibility is to my client and to my borrower, not making the lender happy, making the borrower happy. And so you can mess with your own reputation all you like, but don't mess with mine.
Yeah, that makes
That's all I
everybody
have
look
to
bad.
say about that.
Okay, that makes sense. Yeah. So you mentioned DSCR loan. A lot of my audience probably doesn't know what a DSCR loan is.
Yeah.
Could you explain that?
Yeah. So when I was in banking, we used the terminology DSCR loan as well. I have now come to understand that what we meant by DSCR loan was not the same as what most non-banking lenders mean by DSCR loan. So we're all familiar with DTI, debt to income ratios. So that is the total amount of debt divided by the total amount of income, and you get a percentage of how much of your income goes to pay debt. Well, debt service coverage ratio is the reverse. You divide your income by your debt, and you determine how many dollars of income you have for every dollar of debt you need to pay. So the ideal ratio is that you have $1, the ideal minimum. We can go actually below one, but it gets pretty expensive. So the ideal minimum ratio is that you have at least $1.25 of income for every dollar of debt that you have to pay. Let me tell you what that means to most bank lenders, and then I'll tell you what it means to KFP investors, wholesale lenders, and most non-bank lenders. So banks, they still, for the most part, I haven't worked at every single bank ever, so I can't speak universally, but in my experience, they take all of the income of the guarantor or of the borrower. They take all of the personal income, all of the business income from all of the businesses of the guarantor, and they may or may not include the income of the subject property, depending on their own underwriting guidelines and risk factors. But let's say that they do. They include the income of the subject property. They typically will discount that income by 20 to 30%, meaning for every dollar of rent that you actually receive, they're only going to give you credit for 70 or 80 cents because they want to account for expenses and vacancies and all of that good stuff. So they take all of the income, and then they take all of your personal debts, all of your business debts, all the debts of the subject property, and they cash flow those together into what is a global cash flow. From that global cash flow, they then determine how many dollars of income do you get for how many dollars of debt you have going out. Non-bank lending, such as what we do primarily at KFP Investors, is that we look at the income of the subject property and we look at the debts of the subject property. So let's imagine, for example, that the mortgage payment on your subject property is going to be $750 a month, and the 1/12 of the annual insurance is going to be $100 a month. 1/12 of the annual taxes, property taxes, will be $100 a month, and you have an HOA fee that's $50 a month. 750 plus 100 plus 100 plus 50 makes $1,000 a month in debt payments. That rent needs to be $1,250 a month for a 1.25 debt service coverage ratio. You've got $1.25 coming in for every dollar going out. And that's how simple we make it in the non-bank lending world.
So for a DSCR loan, you're only looking at the subject property. You're not taking in the borrower's W-2 income or business income. It's only based on that income of the subject property divided by the debt of the subject property, being the mortgage payment, insurance, taxes, and HOA fees, not including utilities or vacancies or anything like that. Just those three.
That's correct.
Yeah.
That's correct. Yes. I kind
Cool.
of laugh sometimes um, about conventional lenders and bank lenders. And I'll be honest, I laughed about this even when I was one of those lenders, that the underwriting process for those types of loans is quite invasive, including you may be asked for a DNA sample of your parakeet. And if you don't have a parakeet, you may be required to get a parakeet so that you can provide the DNA sample.
So that's the main advantage of using a DSCR loan is you don't have to worry about your primary income. You're only using the subject property income.
In general, also with DSCR loans, so bank loans are typically a 20 to a 25-year amortization. DSCR loans are typically a 30-year amortization. Bank loans are typically a 60 to 70% loan to value in this economic environment. Today is September 10th, 2024. DSCR loans are typically 75 to 80% LTV. Bank rates are typically about a point above prime, or what is it, 3.5 to 4 points above SOFR. Don't quote me on that one. But it's the equivalent, whatever is the equivalent of a point above prime, but banks switch to SOFR now, so it's
Okay.
different index. We are typically running DSCR loans typically run about 3 to 4 points above the 10-year US Treasury yield. So in other words, our payments are lower because our amortization schedule is longer. Our interest rates are lower because our index is different. Our competition for funds is different, and our fixed rates are typically much longer. We do have adjustable rate mortgages available. I have never actually made a loan with an adjustable rate mortgage since I launched KFP Investors because they don't price out better. So why not have a fixed rate? You're not saving any money. Take advantage of the fixed rate. Adjustable rates don't typically adjust down. So,
Right, yeah. If you're not saving money, I can't think of any reason why
right,
you
why take the
consider an
risk?
adjustable rate.
Right, right.
I think we covered a
Absolutely.
lot about KFP investors. If anyone has an investment property that they want to purchase or refinance, reach out to KFP investors, and Kris will help you get that
Thank you
done.
so much. Yeah, yeah.
So
I
let's
like to tell
touch on.
people that, oh, excuse me.
No, go ahead.
I just like to tell people that we have money for investment real estate between KFP Investors, Wild Fig Financial, and the Aunt Sally Fund. We have money for investment real estate. And if we don't want to do the deal or can't do the deal, you might want to reconsider whether or not you want to do the deal.
Right. That was so leading into my next question with Aunt Sally LLC. What types of projects could someone bring to you that you might fund via Aunt Sally LLC?
Yeah. So let's see. We have done one where we sort of rescued not sort of. We rescued a contractor from himself. He was in foreclosure on 2 properties and was facing likely bankruptcy. We ultimately purchased one of we purchased the property that had the most equity in it, and at the purchase we brought the other loan current. He had 2 properties in foreclosure, so at the purchase we brought the other loan current, and got him an extension so that he could finish the fix and flip project. We got him the funding to finish the fix and flip project. We purchased the tenant occupied completed project, and we used Aunt Sally funds for the liquidity, and we used KFP Investors loan to take advantage of the leverage. Then we master leased and optioned the property back to him because he really didn't want to separate himself from the property. He wanted to keep that property. This was the best way that we could come up with at the time to help him out of his situation. So we bought the property from him, got him the liquidity that he needed, corrected all of his finances, master leased and optioned the property back to him. And that was probably one of the more fun ones. We also have a project where we have supplied a significant portion of the capital for a land purchase that will then be developed into a glamping project, an event center with all kinds of beautiful cabins and trailways and activities. And that project is becoming a syndication. But we started with, we got our foot in the door on that project and helped the clients, the real estate investors, to acquire the land. And then the development becomes a separate transaction and so on. Let's see. What's another project that we did? I told you about the bringing the liquidity for a fix and flip. We've got another project that is, we brought the liquidity for the land acquisition with a wrapped mortgage on a seller carryback to acquire the land for a 53-unit single-family home development in the Chattanooga area. So that one's fun. It's trying to think of what we won't do is probably a better question.
Yeah, I'm just trying to get a general sense. So basically, if someone has a good deal and they just don't have enough liquidity to get it done, they can come to Aunt Sally, and Aunt Sally can help them find that liquidity to get that deal closed for a short-term bridge loan until it's stable enough to get long-term financing.
Well, we'll certainly take a look at it. One
Yeah,
of the things that we typically focus on is an equity position rather than a lender position, as I mentioned
right.
previously, because we want to really play a partnership role as much as needed. We don't want to impose ourselves on the project, but we want to support the real estate investor in the project to help them get it done. So basically, if we run the project through KFP Investors and it doesn't quite fit with any of those guidelines and buy boxes, then it's an opportunity for us to really dig in and use our creative skills to find a way to make it work if it makes sense.
Yeah, that makes a lot of sense. So you touched on a little bit about Wild Wig Financial. This is a new partnership you formed recently. I don't tell me a little bit about that.
Wild Fig Financial. So I met a woman in Knoxville I was there presenting and speaking about Aunt Sally, actually, and creative financing. She had a company called Wild Fig Commercial Lending. Her name is Jen West, and we really hit it off tremendously. We were technically competitors, KFP Investors, Wild Fig Commercial Lending. We were technically competitors. We had the same clients, and we just sort of had an unspoken agreement that, look, I don't fish in your pond, you don't fish in mine. We're friends, we're colleagues, we take care of each other, and there's enough business for everybody to eat well. So there's no reason for us to, attack each other. And because we got along so well, and I actually invited Jen. I was going to a commercial loan group event and training and networking in California. And I mentioned it to Jen and I invited her to go. So we went to California for a few days. Again, building the relationship, really hit it off, have the same interests, have the same morals and standards and ethical compass. And I was launching KFP Commercial. So to separate the fix and flip loans, the 1 to 8 unit residential property, the very small commercial, to separate that from leave that with KFP Investors and separate the larger commercials such as the agency debt and the SBA lending into KFP Commercial. So I was going to have these two companies. And Jen and I were having some really terrific conversations, and we had kind of an aha moment that said, well, why don't we partner on KFP Investors and convert Wild Fig commercial lending to Wild Fig financial that is more all-encompassing, and we can, just divide and conquer and build more together that way. So Jen and I both own KFP Investors, LLC. So that's, again, the smaller residential investment real estate, 1 to 8 units. We're lending in, I think, 37, 38 states at last count. I'm located just outside of Nashville, Tennessee. Jen is located just outside of Knoxville, Tennessee. And our whole team works remotely all over the country. Then we also have the Wild Fig Financial, which does the more commercial. It's a minimum $2 million loan amount, really focusing on that agency debt and SBA lending. And so we both own that. And then, of course, we've talked about ANSA. So that's where we are.
Wow. So how do you think you and Jen complement each other? Like, what's the advantage of you guys forming this partnership?
One of the things about being an entrepreneur is there's a particular personality type mindset that seems to draw folks to entrepreneurship.
Yeah.
And one of the things is sometimes we look around and we feel very much alone. Although we have this independent streak a mile wide, we look around and we feel very much alone. So one of the things that we bring to each other that often is really, really valuable is just someone to lean on. I think about Forrest Gump and Bubba in Vietnam, and Bubba says, you lean up against me and I'll lean up against you, and neither one of us has to sleep with our head in the mud.
Yeah.
Yes. That is a great illustration of my
Keeping your heads out
relationship
of the
with,
mud.
yes. But also just sort of, the teamwork, right? We each bring different backgrounds and skill sets, and I think that she is really, really good at she's much more detail oriented than I am. And I am much more, I shouldn't say much more. I tend to think I'm typically looking at the entire forest, and she can tell me about each of the trees. And I can tell her about the health of the entire forest, right? So I think those are some really strong qualities that we bring together Um, but also just, she already had an existing business and I had an existing business. And why pay for the different, we each needed a website. We each needed a portal for our clients. We each needed a workspace, a virtual workspace for our teams. Well, since we complement each other so well, we can put those things together, and we're stronger together. The total is greater than the sum of its parts.
So all that overhead cost you guys are sharing instead of having that individually. Makes
Yes,
sense. I
yes.
think I think partnerships are so interesting. I think, like you said, this when you can find one to where the sum of the two parts are greater than the individual. It's super. It's probably the most valuable thing you can do in business. But finding one that works is one of the hardest things to find. In my experience, and some other people that I've talked to and heard about, you just hear about partnerships that don't go well pretty often. I've
Like,
experienced those.
yeah, there's the old adage that the only ship that's certain to sink is a partnership.
Oh,
Um,
I haven't heard
but
that one.
yeah, I kind of look at it as being business married, right? So I am incredibly fortunate to have an amazing partner and husband in life. And part of what makes a marriage work is communication and mutual respect and really valuing each other's contributions. And I think a partnership is the same, right? If we really pay attention to communication and respect and valuing each other's contributions, it's a business marriage.
Yeah, that's great. Well, good luck with that. I'm excited to see what you guys are able to do together. How long have you been together now? Just a few
Yeah, so
months,
it
right?
was just May 1st of this year. So we're a little over 4 months into it. And I will say for both of us, I feel confident that I can speak on Jen's behalf on this, that it has been far more challenging and complicated than we necessarily expected. Um, but now that we're getting through the toughest parts of it, it is really, really gratifying to utilize each other's strengths. So, business development and strategy and consulting and coaching, those are the things that, and educating, those are things that I really, really love to do. And so it's kind of, and she's very, very good at originating, problem solving, all of that good stuff. So, one of us catches the fish and the other one fillets and cooks them, and nobody goes hungry and nobody could eat without the other.
All right. Let's shift gears just a little bit before we
Yeah.
wrap up. Um, I like to talk about get a little more personal and understand like why. What's your driving force? What are your major goals in life, and kind of understand what you're trying to build towards. So what are your goals for your future in life, and how does that connect with some of the business decisions you're making?
Okay, but I need to ask permission to sound a little dopey. This is going to be like something that maybe should be like cross stitched on a throw pillow or something. It's going to
I
be
love it.
like live, laugh, love. So, um, becoming self employed was so incredibly life changing for me for the positive. Having control over my time, I'll admit there are some days that it's really, really frustrating. And I start thinking about getting a job as a dog groomer because that sounds easier, even if my clients bite me. But then I remember about having a schedule and having to request time off and just not having the life freedom that I so much enjoy. I no longer have to build my life out of the time that's left over from work. I get to integrate my work and my life, thereby drastically increasing the quality of both. So, all of that said, my firm desire is to support and empower as many people as possible who want to reach out and grab that for themselves. I can't hand it to you, but I can darn sure encourage you. I can tell you the pitfalls that I've experienced along the way. And I want everybody to have that freedom that I have. Everybody who wants it, right? Not,
Right.
a lot of people want to just clock in and clock out and go home and put it to bed, and that's what they want to do. And sometimes that's very, very tempting. For me personally, I'm telling you, my next life, I'm going to be a dog groomer, or I'm going to work at a doggy daycare, something like that. That's what I want to do. Um, but to that end, one of the things that we try to structure across all of our companies is that we try to have as few employees as possible. We try to have contract associates so that each one of them essentially have their own business under the umbrella of our brand, so that they can have that freedom for themselves. So our originators, their compensation is based on production, and they get to have the same freedom as self-employed individuals because they are. So
Yeah.
that's how we try to practice what we preach.
That really resonates with me because I feel the same way. I left my career as an engineer for 13 years in 2022, the beginning of 22, to become fully self-employed. And yeah, just now that I'm able to integrate my personal life into my, yeah, I plan my life around my personal life and work it into my daily schedule. I'm not working from 9 to 5. I'm working from 7 to 10, and then I do some personal stuff from 10 to 12, or whatever it may be. But just being able to have that freedom and full control of my schedule is something that's more valuable than anything.
Absolutely. Absolutely. No matter how tempting doggy daycare might be.
Yeah, that's great. So, what are some of the most important relationships in your life? I know you talked about your husband.
Yeah, so we have been married for almost 3 years, second marriage for each of us. We have a blended family, so together we have 5 children. My husband, Tim, hi, sweetheart. Tim, he was self employed actually for about 20, 25 years. I kind of lose track. But he was an entrepreneur um, from basically being a teenager through his, midlife. And I think it was about 7 or 8 years ago. So before I met him, he actually hung up the business and took a W-2 job because he had lived that freedom when his kids were young, and he'd had that experience. And now he wants to clock in and clock out and be done with it and not answer calls on evenings and weekends. And so I say all of that to say, having someone as a life partner who has had the same experiences of being a business owner, being an entrepreneur, and understands, even though he owned a wrecker company and I work in investment real estate, there are so many parallels.
Hmm.
And I could not accomplish any percentage of what I've been able to accomplish without Tim's support, understanding, wisdom, guidance. A lot of the things that I've been able to do have been because he told me different things to avoid as
Hmm.
having been an entrepreneur, right? And sometimes it's nice just to commiserate and go, I'm gonna go work. I'm gonna put in my application at doggy daycare tomorrow. And he goes, okay, honey, tell me about it in the morning. And of course, the morning everything is fresh and new, and I'm ready to rock and roll. And And I get to hang out with really cool people in my business. But um, also, my girls. So I mentioned that we have 5 children between us in a blended family, and Tim's children were already adults when I met them. There hasn't been any parenting there, but I get to hang out with some really cool people, and I married into getting to be a grandma. So I'm a Gigi with 4 grandkids, which is super fun. But my biological children, my daughters, I have 3 girls, and having the opportunity to demonstrate to them through my life actions that we can do hard things, and we can um, we sometimes it takes, you have to build the plane as you're flying it, and that's okay. And that failures, we just, as long as you're failing forward, that's okay too. It's better to try and fail than to not have tried. So, having those relationships with my daughters and getting to hear their questions and see their experiences. And my youngest daughter, Charlotte, made her first real estate investment when she was 12 years old. And she invested in some vacant land with 10 other children. So, that spirit started young. It's a lot of fun. So my family absolutely are some of my closest and best relationships. And then, the friendships that have been formed with um, Sharon Kanor and I like to joke. We're joking, of course, but investment real estate is a cult because it's a lifestyle. It's not just a business. It's not just a financial endeavor. It's a lifestyle. And so Sharon Kanor's partnership has just been incredible.
That be able to instill those values into your daughters and build those relationships and what the freedom and opportunity that real estate business has given you and so many people is so valuable.
It's it's a great way to live life
I
most
agree.
days.
Who are some of the people that have inspired you along your journey?
Oh, goodness. So, Alex Brashears is one of the authors of a book called Lend to Live. And I could grab my copy off the bookcase for you, and it's going to have all these little flags in it. Um, and the reason that that's important is because I have all kinds of certifications and credentials about underwriting and lending, and but Alex Brashears and Beth Johnson wrote this book, Lend to Live, designed for the private lending space. Well, I happened to meet Alex Brashears on Facebook, and we became friends. And we have gone on vacation together, and we keep in touch with each other. And I'm
Wow.
sure Beth is just as delightful, but Alex is the one I happen to develop the relationship with. Um, but she is really, really inspiring to me in what she has been able to build and accomplish. And again, just the whole concept of there wasn't a path, so I made it. I made a path. I cut a path. There wasn't a trail to follow, so I built one, and built the life that she wants to live and continues building it. There are so I feel like I'm at the Oscars, right? Like I want to thank my producer and my mom and my third grade teacher. Um,
That's
I
okay.
couldn't possibly name all the people, but Alex has been very inspiring to me, particularly as a woman in this space. There aren't a ton of us, so it's nice to see, nice to have that inspiration to keep us going on the tough days.
I will check out that book, Lend to Live. I'll look it up.
Yeah,
Awesome. Well, Kris, thank you very much for taking time today to speak with me and to share your story. And like I say, yeah, if anyone wants to reach out to you, what's the best way for them to get in touch?
Yeah, absolutely. So KFP Investors,
Uh-huh.
like Kite Frank Paul, KFP Investors LLC.com is our website. There's information about our company. There's a contact form. If you want to call us, our main number is 615 22 no 234 1222. That's 615 234 1222. And I also encourage you, if you're interested in coaching or consulting about your own investment real estate business and some really in depth, personalized discussion, analysis, strategizing, KrisFleming.net. KRISF like Frank, LEMING.net. Someone asked me once, oh, was KrisFleming.com taken? Yes, it was.
Mhm.
If you
Really?
own it, give it back to me. But KrisFleming.net is the best way to reach me personally.
Excellent. Well, thanks again, Kris, and I'll be in touch soon. Have a
All
great
right.
day.
Thanks so much, Vince. Excited to do some more business together.
Me too.